Hey everyone, I'm willing to bet that you're all keeping a close eye on the markets today, November 26th, 2024.
Definitely a day to watch.
Yeah, Wall Street's been on this incredible run hitting record highs, but you can definitely feel a little tension out there.
Yeah.
So we're going to do a deep dive today into a recent market report to see if this whole bullish energy is here to stay or if things could take a turn.
Well, what's really interesting right now is that we're kind of seeing like a split personality in the markets.
Oh, okay.
So, on the one hand, we've had 7 straight days of gains pushing Wall Street to these new heights. But then on the other hand, you look a little closer and you see that a good chunk of the NYSE, like 2/3 of the stocks, were actually trading lower by midday today.
Hmm, interesting.
It really makes you think twice about how strong this rally really is.
It does, it really does.
Just a few days ago, the whole feeling was totally different.
Totally.
Everyone seemed like they're ready to jump on the bull train, and now it seems like maybe some people are starting to get a little nervous.
Yeah, maybe getting cold feet.
Right, and that's where those mega cap stocks come in.
Okay.
The big names, Apple, Meta Platforms, Alphabet, Microsoft, they're all surging today. Even Nvidia got in on the action later in the day.
Interesting.
And these companies are often seen as safe havens when things get a little uncertain.
Hmm.
So their strong performance could actually be a sign that investors are starting to get a little jittery.
Okay, so we're seeing these mega caps sort of leading the charge, but the broader market is telling us a different story.
Right.
Is it possible then that investors are flocking to these big familiar names because they're actually worried about what might be coming next?
It's definitely a possibility,
Yeah.
It could be a classic case of what we call flight to safety.
Okay.
When investors get a little nervous about the market's direction overall, they tend to seek refuge in those companies that seem more stable.
That makes sense.
The reliable ones. So instead of looking at this mega cap surge as a sign of overall market strength, it might actually be reflecting a growing sense of caution among investors.
Yes, a great point.
What do you think? Do you see it that way?
Yeah, no, I think that makes a lot of sense. And of course, we can't forget about all the talk about tariffs that's been going around.
Oh, right.
President-elect Trump's comments about those new tariffs on imports from Mexico, Canada, and China definitely threw a wrench into things.
For sure. The market had a very classic knee-jerk reaction to that news.
Oh, really?
The dollar spiked up initially and then pulled back a bit as investors started to really digest what it all meant.
Interesting.
It seems like certain sectors were hit harder than others, though.
Oh, like which ones?
Well, semiconductors, energy, retail, manufacturing, auto companies, they all felt the pressure.
Wow, so we're talking like Micron, ExxonMobil, Nike.
Yep, even Toyota, Whirlpool, and Ford were feeling the heat as well.
Yeah. Wow. Okay, so the market definitely reacted. But is it possible to know how much of that was directly because of those tariff concerns?
Yeah, that's the tricky part. There's always so much happening in the market at the same time.
Right, exactly. And speaking of things happening, what's the deal with PCE and why is everyone so obsessed with it right now?
Right, well, PCE stands for Personal Consumption Expenditures,
Okay.
and it's basically the Fed's favorite way to measure inflation.
Gotcha.
They really like it because it captures a broader range of spending than some of the other measures out there.
Okay.
And let me tell you, inflation is the topic on everyone's mind these days.
Yeah, for sure.
Tomorrow we're getting the October PCE report, and investors are definitely on the edge of their seats, waiting to see what those numbers look like.
So what are we expecting to see? Is inflation going to finally start to cool down, or are we in for another wild ride?
Well, Trading Economics is predicting that both core and headline PCE will stay pretty much flat month over month. But here's the thing. Year over year, they're expecting those numbers to actually go up.
Oh, so that's not good.
It could be a sign that inflation is stickier than we'd like it to be, and that could really affect what the Fed decides to do about interest rates.
Right, because the Fed minutes came out today and there was talk of another possible rate cut this year.
Exactly.
But if inflation keeps heating up, that could throw a wrench in their plans.
You got it. It's a real nail-biter right now.
Eh.
The CME Fed Watch tool, which uses market data to predict the likelihood of future rate changes, is showing a 63% chance of a rate cut in December.
Okay.
But just yesterday, that number was only 52%.
Wow.
So things are definitely still up in the air.
It really feels like everyone's just waiting to see which way the wind blows before making their next move. Speaking of moves, though, some interesting things were happening with individual companies today. What really stood out to you?
Well, Best Buy and Kohl's, they both had some kind of disappointing news today.
Oh, no.
They missed revenue expectations, and they both gave weaker than expected sales forecasts. Best Buy, even specifically mentioned softer than expected demand, which doesn't exactly inspire confidence, does it?
Not really, no. And Kohl's is saying that apparel and footwear sales are still pretty sluggish.
Yeah,
So does this mean consumers are starting to, tighten their belts a little bit?
maybe.
Is this a sign that the holiday shopping season might not be as merry as everyone was hoping for?
Well, that's the big question, isn't it?
Yeah,
These are big, well-known retailers, and how they perform can often be a good indicator of the overall health of the economy.
that's true.
So if people are starting to hold back on spending at places like Best Buy and Kohl's, it could signal a shift in consumer confidence, especially with the holidays right around the corner.
Right, that's definitely something to keep an eye on. Okay, so not the most cheerful news from the retail world, but what about some of the other companies making headlines today?
Sure.
What else jumped out at you?
Well, there's Zoom. They actually beat earnings expectations, and they even raised their guidance for the future. But get this, their shares still went down in after-hours trading.
Wait, what? Why would that happen if they're doing so well?
Yeah, it seems counterintuitive.
Yeah.
But remember, we're talking about the tech sector here.
Right.
And growth expectations are really, really high.
Okay.
Investors are looking for these companies to just absolutely crush it every single quarter.
Yeah.
So even if a company like Zoom delivers a solid report, it might not be enough to really impress investors.
Wow, so it's like they're being held to a totally different standard.
In a way, yeah. So what about the healthcare sector? Anything interesting happening over there?
Well, actually, yeah, Amgen, the big biotech company, they released some positive results for their new weight loss drug, which sounds like good news, right?
Sounds like it.
But guess what? Their shares actually fell.
Oh, wow. Really?
Mm.
Why would the market react negatively to positive news like that?
Well, it seems like Amgen's drug didn't actually manage to outperform a rival weight loss drug from Eli Lilly. It's called Zepbound. And investors were hoping to see Amgen's drug sort of steal the show.
Right.
But it looks like Eli Lilly is still the king of the weight loss hill for now.
Makes sense. So speaking of ups and downs, we can't ignore that new home sales took a pretty big hit in October.
Yeah, that was a big story today. Sales came in at a seasonally adjusted annual rate of 610,000 units.
Yeah, way below what analysts were expecting.
Yeah, they were predicting 718,000.
Big difference.
That's a 17.3% drop from September and a 9.4% decline year over year.
Yeah, those are some pretty steep numbers.
Yeah.
So what's going on with the housing market?
Yeah.
Is this a temporary blip, or is this a sign of a bigger trend?
Well, it's possible that those recent hurricanes might have had some impact on the sales numbers for October.
Yeah, could be.
But I think we really need to see what happens in November to get a clearer picture.
Right. If sales keep falling, then it might be a sign of a more serious slowdown in the housing market.
And I'm guessing this news wasn't exactly welcomed by those home builder stocks.
No, not at all. Companies like KB Home, Lennar, D.R. Horton, and Toll Brothers, they all saw their shares drop after this news came out.
Makes sense. If fewer people are buying homes, that's going to directly impact the companies that build them.
Exactly. It's all connected.
Yeah.
So we've got some not so great news from retail, some less than stellar news from the housing market.
Mm-hmm.
Those mega cap stocks may be hinting at some anxieties underneath the surface.
Right.
And then, of course, we have the inflation question still looming over everything.
Right. Are there any bright spots in all of this? Anything to give us a little bit of hope?
Well, actually, yeah, there's some good news on the consumer confidence front.
Oh, okay.
The Conference Board's Consumer Confidence Index rose to 111.7 in November. That's up from 109.6 last month.
Okay, so that's something. But I thought it was supposed to be even higher.
You're right, it did fall a little bit short of expectations. But it's still the highest reading we've seen since the middle of 2023.
Well, that is good.
And here's what's especially encouraging, the Expectations Index, which measures how people feel about the future. That actually jumped up to 92.3 from 91.9.
So even with all the uncertainty in the air, people are still feeling optimistic about what's to come.
That's what it seems like. And get this, consumer expectations for inflation over the next year, those actually decreased.
Oh, wow. Okay.
From 5.3% down to 4.9%.
So maybe, just maybe, inflation is starting to ease up its grip just a little bit.
It's possible. We'll have to wait and see.
It would be a huge relief for everyone if it did.
Absolutely. But we need to see those inflation numbers trending down consistently before we can really breathe a sigh of relief.
Yeah, I agree. So we've covered a lot of ground today. We've seen record highs on Wall Street, but also a sense that maybe things aren't quite as rosy as they seem. We've seen those mega cap stocks surging, but is it real strength or are people just afraid of missing out?
Right.
And then we have these mixed signals coming from different sectors of the market, leaving us all wondering what it really means for the average investor.
It's a complicated puzzle, that's for sure.
Yeah.
But I think the more we understand how the different pieces fit together, the better equipped we'll be to actually make sense of the bigger picture.
I completely agree. And I think the big question that's hanging over everything right now is, will inflation finally cool down enough to let the Fed ease up on those interest rates?
That's the question, isn't it? And tomorrow's PCE report could really hold the answer.
We'll have to wait and see. But while we wait, let's think about what all of this means for you, the listener, because at the end of the day, that's what matters.
Exactly. How do we navigate this ever-changing and complex market and actually make smart investment decisions? I think the most important thing to keep in mind is that there's no one right way to invest.
Right.
You really need to find an approach that works for you, your goals, your risk tolerance, and you know how long you plan on investing.
Yeah, it's all about finding that balance.
Right, exactly. Where you're comfortable with the level of risk you're taking, but you're also confident that you're making decisions that will help you reach those financial goals.
Absolutely. And don't let all the headlines and hype get to you.
Yeah, that's a good point.
It's easy to get caught up in that whole fear of missing out or panic when the market dips.
Oh, yeah.
But, having a well-thought-out investment strategy can really help you stay on track.
Definitely. Helps you ride out those ups and downs.
Exactly. And, as we were talking about today, there are so many different factors that can influence the market.
So many.
Inflation and interest rates.
Yep.
Company earnings, even consumer confidence.
It's like this giant, ever-changing puzzle.
It is.
But the more you understand about how all those pieces fit together, the better you'll be at making informed decisions.
Absolutely. And, speaking of making informed decisions, don't be afraid to ask questions and do your own research.
Yes, good advice.
There are so many great resources out there that can help you learn and grow as an investor.
Definitely. One thing I think is important to remember is that even the experts don't have all the answers.
That's very true.
We're all just trying to make sense of this thing,
That's a great way to put it. We really are. So as we wrap up our deep dive today, I want to leave you all with a thought.
Okay.
We've seen these record highs on Wall Street, but we've also talked about this kind of underlying feeling of caution that's out there. We've seen mega cap stocks doing really well, but is it true strength, or are people just driven by fear? What do you think all of this tells us about how investors are feeling right now?
Are they truly optimistic? Or is this just a fear of missing out rally that could disappear quickly?
That's the big question, isn't it?
Yeah, it's something we should all be considering as we watch how things unfold.
It's a fascinating puzzle, and I think we're all just trying to put the pieces together one day at a time.
One step at a time.
Thanks for joining us for this deep dive. And remember, keep learning, keep asking questions, and keep investing in your knowledge.
And in yourself.
Yes, exactly. We'll be back soon with another deep dive into the world of finance and investing. Until then, happy investing, everyone.